what is your thinking on how far away we are from another crisis? It's been a while.
Well, I think I might have a somewhat more optimistic view than Mr. Dalio, but he has obviously many billions of dollars more than I do. But I will say that I think it's very hard to get a recession when the real Fed funds rate is zero, which it is right now. I think, frankly, there's a good chance the cycle will last quite a bit longer. I saw him quoted saying we're in the seventh inning. I think there's more of a chance we're in the fifth inning, that the cycle could last quite a bit longer, and that has a lot to do with the potential supply side impact of the tax cuts, which I think a lot of people are viewing the tax cuts as kind of a one-shot deal, and I think there's a chance if the corporate tax cuts are used for capital spending, that you could have a much longer cycle than people are anticipating.
Will they be, though, Jason? I mean, it feels like maybe the demand isn't there at the end of the day, and there's a lot of uncertainty about trade. Do we get corporate spending, and for how much longer?
Well, listen, there was a San Francisco paper that was just released on this topic, and I think a good portion of the cash flow has gone to share repurchases. But one of the things that was, for some reason, was kind of ignored when it was reported upon, the San Francisco paper said that it was too early to tell whether it would go into CapEx. I think there are some real signs that we're seeing that capital spending is rising, and I would say that as far as trade is concerned, to be honest, it looks like the U.S. is faring extraordinarily well in the context of what some people have described as a trade war. I mean, the S&P is up 8, and China's stock market's down about 20. So, I don't. It seems to me we're doing okay.
Well, the stock market is not the economy, as people like to say. Jason, do you think that it's just a matter of it being too early to see those kinds of effects as we start to see the retaliatory tariffs back and forth? Do you think that we will start to see more of a pinch, particularly with specific products and specific industries? Because those that have been targeted very specifically, their stocks have gone down.
Well, listen, I think you're right. The stock market isn't the economy, but the stock market tends to be a pretty good leading indicator of the economy. And regardless of what we think, I know the administration kind of views it this way. You may think that's a good thing or a bad thing, but I do think the credible threat of tariffs, in a strange way, has led to, I would argue, probably potentially freer trade with Mexico, certainly, and it seems like we're on the doorstep of a better trade deal with Canada. Europe, I think, as well, is probably coming around. So, I tend to view the president as more of a trade reformer than an anti-free trader. I do think, with regard to China, though, that will be a far bigger issue, and potentially, I think you're right, Julie, potentially much bigger impact on the overall economy if it gets bad. I don't anticipate it'll get bad soon, but I do think after the midterm elections, you'll probably see a stronger stance on both sides.